Today, crypto prices decline as the U.S. stock market sees its worst month since March 2020. Goldman Sachs lets a customer back a loan with Bitcoin. And Katie Talati of Arca talks altcoin performance. Welcome to CNBC's Crypto World. I'm Tanaya Macheel. Digital currency prices traded slightly lower this morning. By 12:30 Eastern, Bitcoin was worth $38,000 and Ether was worth $2,800. Solana was worth about $94. Today's losses only add to Bitcoin's more than 16% decline since the start of April. Ether is down about 14.5% in the past month. For comparison, the S&P 500 will finish the month about 9% lower. New research from Citi says that crypto prices were boosted earlier in the year thanks to investors fleeing Wall Street for digital assets. They believed crypto would become more important after Russia was banned from the SWIFT payments platform, but that never came to fruition. Crypto remains tightly correlated to traditional risk assets, and investors have little appetite for said risk as recession fears rise. Over at Mizuho, a new survey shows that half of Bitcoin investors think it's a bubble. 51% of the 400 consumers surveyed said they thought Bitcoin was overvalued, but at the same time, more than a third believed it would rise to $55,000 by the end of this year. And that's about a 29% upside from today's prices. The survey also found that 60% of investors hold Bitcoin as an investment, while 30% hold it simply because of FOMO. Okay, let's talk about the top stories. Goldman Sachs is deepening its crypto involvement with a Bitcoin-backed loan. The banking giant just lent cash using a customer's Bitcoin investments as collateral, and this is according to a report from Bloomberg. Now, this isn't the first time a bank has used crypto for collateral, but it does show the growing acceptance of the technology for major Wall Street players. Just last month, Goldman completed its first ever over-the-counter Bitcoin trade as well. Next, a new bipartisan bill aims to increase government oversight of crypto markets. The Digital Commodity Exchange Act would put control of digital commodities under the CFTC, that's the Commodity Futures Trading Commission. The bill defines a digital commodity as, quote, any form of fungible, intangible, personal property that can be exclusively possessed and transferred person to person without necessary reliance on an intermediary. The bill would leave oversight of securities under the purview of the SEC. Finally, Coinbase's NFT marketplace is off to a slow start. According to June analytics, the platform saw fewer than 1,000 transactions in its first week and only added about 700 customers. Now, things do look to be speeding up on Coinbase, at least a bit. Yesterday, June reported more than $100,000 in NFT transactions. All right, for our main story today, I spoke to Katie Talati. She's the Director of Research at Arca. We talked about the state of Bitcoin, ApeCoin, and more. Bitcoin, 13-ish years old. It hasn't always appeared to be so closely correlated with the traditional risk equities markets. So how long do you see this lasting?
This relationship kind of started, I would say, probably beginning in mid-2020 when a lot of corporate treasuries began buying Bitcoin for the first time and adding it to their balance sheet. In addition, we know that a lot of funds and a lot of other institutional investors have been purchasing Bitcoin more as part of an overall macro strategy and an inflation hedge. And unfortunately, they aren't necessarily the long-term holders. Bitcoin has had some really great developments this week that I wanted to highlight. Fidelity announced that they're going to be allowing anybody who has a 401k with them to purchase Bitcoin in their retirement account. That is a huge development just for individuals to get access to, the upside and long-term value proposition of Bitcoin. Panama announced that they are going to make Bitcoin legal tender. So did the Central Republic of Africa. And Goldman has been testing a Bitcoin bond. So I think that, Bitcoin is seeing more and more adoption as an asset and as something that is, very much unique from traditional asset classes. But I think until that kind of dispersion of owners, changes into people who are more longer term versus those who are kind of using this as like a macro trading vehicle, we're going to see it kind of continue to match regular equity markets.
Been talking about Sushi Swap this week. So, they released a restructuring proposal. Tell us first, for people who might not be familiar, what Sushi Swap is and why this development is significant.
Sure. So Sushi Swap is a decentralized exchange. You can trade it to a number of different assets on Sushi Swap. So Sushi Swap was actually doing a lot of cutting edge stuff on the technology front for trading adding different product lines. They have like a lending product. They have an initial offering platform, and they even are spinning up an NFT trading site. Unfortunately, they've just been plagued a lot by internal problems as of late. So we were really excited that this restructuring proposal came out this week because it just basically gives the project some kind of more organizational structure. And overall, we think that'll align everybody in the community much more tightly.
I also want to move on to Tron. So again, to start, tell us a little bit about what it is and the big development this week.
So Tron is actually a layer one blockchain. It's been around for quite a while. They're creating a stablecoin called USDD. And that is going to, like I said, kind of be algorithmically issued. So they announced that they're going to be doing this stablecoin. If people want to deposit and lend it on their platform, they're going to offer a 30% yield on it, which is pretty high for like a risk-free yield. But they're going to be raising a $10 billion treasury reserve to cover this yield. So the concept of algorithmic stablecoins was originally created because a lot of individuals didn't necessarily trust the centralized stablecoins that you might be familiar with, like USDC. More specifically, USDT or Tether was one several years ago that a lot of people called into question. Was it fully backed? A centralized entity controls it. There's no transparency into their reserves. And so the idea of algorithmic stablecoins kind of came about where you're not necessarily relying on a one-to-one peg, but you're relying on some other mechanism that kind of backs the price, but uses a different asset. So we've seen algorithmic stablecoins backed mostly with ETH. We've seen them backed with other assets. Recently, the algorithmic stablecoin that we've seen popularized a lot by Terra, as I mentioned, is UST, where users essentially contribute Luna, Terra's stablecoin, and that is burned. And then in exchange, you receive UST in one-to-one.
Do you still see Bitcoin as sort of the leader of the market?
I mean, I definitely see it as a market leader. I was actually very surprised that all these like really positive developments happened this week. And, obviously price is down, I think 2% on the week, which I think just shows again that it's not really being driven by any of these catalysts. I actually think, though, that one really important thing to watch for this next week is going to be ApeCoin, which, if you're not familiar, is the token that was issued by Yuga Labs. They're the company that owns the IP for Bored Ape Yacht Club and all the offshoots such as Mutant Apes. So they're going to be doing a land sale tomorrow. And a lot of people are speculating that they're going to raise about $500 million in this land sale. ApeCoin has increased a lot in price over the last week. I think it's up over 60%. And people think that, or are speculating that it's going to go up further in price. In addition, I think it's going to be a super distributed sale. Users can only mint 2 NFTs. And so that really means that you're not going to have like large holders accumulating large plots of these lands. It's going to actually be fairly distributed across the buyers.
Okay, be sure to check out that full interview and more over at cnbc.com/cryptoworld. That's all for today, but we'll be back again Monday. See you then.